Okay, hi. Welcome to the podcast for Chapter 5. This is Learning Objective 7, which comes from Appendix, the end of Chapter 5. It's Appendix 5A. So after after the regular Chapter 5 stuff and then the homework and stuff for Chapter 5, then the appendix for 5 starts, and it's Appendix 5A. So this one deals with being a periodic inventory tracking system, and this particular podcast deals with the being a periodic buyer. You may want to compare with what we're doing in this one to your notes that you took from being a perpetual buyer, so you can see those differences. And then we have one more podcast where we are a periodic seller, and you may want to contrast that with the notes you took from being a perpetual seller. So as a periodic buyer, we do not keep track of the ins and outs of inventory. In fact, our inventory account just remains the same balance it was at the end of last period, all during the month that we're in. And the only time we change it is at the end of our new month when we go and take a physical count of our inventory. So, if we are not debiting and crediting inventory when we are making transactions during the month, we obviously need to have some accounts. We need to use some accounts to do those transactions. And the ones we do are listed right here. So when we make a purchase, we use the purchase account. When we take a discount for paying early, we use the purchase discount account. When we make a return, we use the purchase returns account. And when we pay for shipping, if it's FOB shipping point, we use freight in. Recall, previously we'd talked about freight out. Freight out is an operating expense. Freight in adds to the cost of the inventory. So this is the exact same transactions that we saw earlier, and we're going to do that this time as a periodic inventory. So we're the buyer, so we're the stereo company. We purchased $3,800 worth of goods. The terms are still 210 net 30, and it's still FOB shipping point, so we have to pay for shipping. However, we don't debit inventory. Since we don't track inventory in and out, we debit an account called purchases. What about freight? If we pay the freight company $150 to pay for the freight, we don't debit inventory and credit cash. We debit freight in and credit cash. If we return $300 worth of goods, we debit accounts payable for $300 because we don't owe that amount anymore, and we credit, instead of crediting inventory, purchase returns and allowances. If we pay within 10 days and we take a 2% cash discount, we need to remove accounts payable from our books, so we debit that for the $3,500. Again, we're going to credit cash for the $3,430. That's the same number we calculated before. But now, instead of crediting inventory for $70, we credit purchase discounts. Okay, so one of the things we need to arrive at then at the end of the period is what our net purchases are. And the way that we calculate our net purchases is we take our purchases plus freight in minus purchase returns and allowances minus purchase discounts to get us net purchases. That's an important calculation because we need to use that in calculating our cost of goods sold. Since we haven't been debiting or crediting inventory, we also don't know our cost of goods sold yet. And although this technically relates more to the seller, right, because the seller is the one who records the cost of goods sold, I want to show you how the purchases come into that. So this is called the cost of goods sold model. And what we do is we take our beginning inventory and we add in our purchases. And really this ought to say net purchases, what we just calculated on the previous slide. So we add in our net purchases. That equals the cost of goods available for sale, meaning that's everything we can sell. And I think that might make sense to you, right? Everything we have on hand plus everything we bought is all we can sell. Then, at the end of the month, we have to physically go and count our inventory. How much inventory do we still have? If I subtract that from what I had available for sale, what I am left with is what I sold, and that is cost of goods sold. Okay, that is the podcast for Learning Objective 7, a periodic buyer.